What's up everybody? Welcome to the Stocks channel. My name is Cory and today was the official first day of what could be the Santa rally, and we are seeing some positive buying pressure. Will we continue to see this rally next week? First up, let's take a look at the SP500 SPY ETF. So let's crack open this chart and see what's going on in the stock market today. Alright, so I want to start out looking at the weekly chart of SPY. And if you go back in time, I told you there was a good chance we get rejected from this bear market resistance trend line and see at least 3 weeks of selling in the S&P 500. And today was the end of the third week, and yes, it did close slightly in the red. Now, the last time we had these rejections, we had at least 3 weeks of selling and then a nice strong bounce before we continued the bear market. And I do think we are going to see another nice strong bounce next week, which I am calling the Santa Claus rally. Now keep in mind, there has been a lot of people when we were at this resistance that said it's way too obvious and everybody sees it coming and there is no way the stock market is going to reject from that level again because everybody can see it happening. And yet we rejected from that level anyway, and we repeated the 3 weeks of selling as expected. Now we're getting into a situation where there's people saying everybody is talking about a Santa Claus rally, and if everybody's expecting a Santa Claus rally, there is absolutely no way we're getting one. So while that could be true, obviously that does not mean it won't happen because people were saying the same thing about the rejection from resistance. So do keep in mind, while SPY is above this weekly support at SPY 380, there is a very good chance that we rally back up towards the 390s and close that gap on the daily chart around 396 before we continue the bear market. So pay attention to the weekly chart because it is telling you very clearly we were getting buying pressure at the end of the week, and that is why we have this hammer looking candle. And we would not be getting buying pressure if the market was getting ready to crash. So there is a very good chance of that Santa Claus rally next week, and we did get the 3 weeks of selling from resistance. So jumping over to the daily chart on SPY, we can just do a quick recap of the weekly chart, and we could see that we are still expecting that Santa Claus rally to take us up to the gap fill in the 396 zone by the first couple of trading days of next year, which is going to take us into early January. We're staying bullish for this possibility of the Santa Claus rally only while SPY is above the critical risk level at 378, because below 378 we will be looking for SPY to head back down into the 360s and the 350s. So while we're above 378, we're watching resistance to the upside around 386, the gap fill just above 387, and then the strong resistance zone at 390, 393, and the gap fill at 396. Any of these upside price targets could be our Santa Claus rally destination. Even though I do have it drawn going all the way to 396, there is no way to know where exactly we're going to end up. So stay optimistic that this is possible as long as SPY is above this critical support at 378. On the Nasdaq 100 triple Qs, we were up 0.22% today, and the triple Qs did shake off closing below yesterday's low, and we are starting to see a little bit of a green candle off of this support around 267. Now you can see this is the second day closing below the support trend line at 268. So you do want to be extra cautious in the triple Qs while we're below 268 because there is still a good chance we come down here to test the lower support at 260. Below 260 will likely make a brand new 52-week low, which will be down here around 250. But if we can start bouncing and break back over 270 and then break the resistance at 273, we could see that Santa Claus rally take us all the way up to 280 or the gap close at 283. So if you want to manage your risk for a Santa rally in the triple Qs, I would set your risk down here right around 267. In the Dow Jones, we are up 0.51% today, and the Dow Jones got another close back over the 50 EMA, which is exactly where we saw that hammer candle from yesterday. And we did take out yesterday's high, confirming that the hammer candle is bullish. Remember, anytime you get a hammer candle, you want to take out the previous high, and that's exactly what the bulls did today. From here, the Dow Jones can likely rally to 334 and then up there to fill the gap just below 338. And anything above that will be a bull breakout that could take us all the way back up to 346. The critical support remains 330, 327, and 325. On the Russell 2000 IWM ETF, we were up 0.46%, and again, we're starting to look like we're getting a bounce, but we are still below the 5 EMA, so manage your risk around this support at 172, because if we break below that, we're going back down into the 160s. The upside resistance remains 176, 178, and that gap fill just below 179. On the ARKK ETF, we were down nearly 2% today, and we did close below the support at 31.3, so it does look like we're trending down towards the next price target at $30. I do think this ETF is getting very close to putting in a final bottom, but we can never be sure because we are in such a strong bear market. So if we break down below $30, We are very likely going to see some type of major capitulation event, although I do think we have already seen capitulation in this ETF, because here we are breaking down to brand new 52-week closing lows, and it's all happening on decreasing volume. So there's just really no high volume panic selling in this ETF, which means there is likely no retailers left in this ETF as well. Look for upside resistance at 31.3, 32.5, and the gap fill at 34.4, and we're not getting bullish until we can get back over this resistance just above 34.6. On the VIX, we were down 5.1% today, and the VIX continues to get crushed, and it does continue to tell us there's just absolutely no fear in this market, which does favor the potential of that Santa rally next week. If the VIX starts crushing down below 20, it's going to be very bullish, but there's also a good chance the VIX continues to find support at 20, and then we see another spurt of volatility as the VIX spikes back up from that support level. On Bitcoin, we're currently flat, going absolutely nowhere, and Bitcoin is still trading below our two resistance levels at 17,000 and 17,550, and we can't get bullish until we get a bullish breakout above that resistance. Critical support is 16,000 because if we break support, we're going for the next leg lower at 14,395. On Amazon stock, we were up 1.74% today, and Amazon is still finding resistance at that breakdown right there at that resistance at 86. And if we get rejected from 86, we're looking for the next leg lower at $80 and then 77. Above 86, we have strong resistance at 91 and 97. And if we could break that resistance, we can break out of the downtrend and start getting a lot more bullish in Amazon. On Microsoft, we were up 0.23% today, and Microsoft bounced off of the top of this gap fill right around 234, and we're still bearish while we're below 242. Below 242, we're likely trying to fill the gap around 228, and we're getting a lot more bullish if we could break above 245 and then 252. On Nvidia stock, we were down 0.87% today, and Nvidia is bearish while below 156 for the gap fill to the downside at 142. Above 156, we can run back up to resistance at 166, and above 166, we'll be looking for the gap fill at 174. On Tesla stock, we were down 1.76% today, and again on very high volume, but we are seeing the selling pressure start to slow down, and we're still above our next price target, which is down here right around 117. We did have a weekly support at 129 that we did close below, and I am leaving the arrow on the chart. Even though we violated the support, I still think there is a chance we run up towards 155 to 167 by early January. Remember, just last night I went over this as a capitulation event, and I believe anybody selling down here below 138 is being irrational or being forced liquidated. So I do not think this is going to be a great place to sell this stock. I think it's the exact opposite, and I think people should be buying at these levels, getting ready for a counter trend rally. Now, if you don't agree with me, manage your own risk. This is obviously just my opinion, but I do think now is the time to consider loading up on this stock and preparing for a very face-ripping rally, but you do need to be mindful of the resistances at 138, 155, and that critical resistance at the neckline breakdown right around 167 to 168. On Apple stock, we were down 0.28%, and Apple hit that very critical support at 130 yet again, and we continue to find buyers at that level. If Apple breaks 130, we're likely going to see some type of capitulation in this behemoth of this big tech name, and I just don't think now is the time to lose this support. Yes, it's possible, and yes, we can go lower. I just don't think it's going to happen. So if we do break this support, look for high volume selling as panic sellers exit Apple stock for a loss and run for the hills. However, if we get a bounce from here, we could bounce all the way back up to 135, and then above 135, we can get all the way back up to 141. On the financials, we're up 0.56% today, and I think the financials will see a Santa rally that could easily take us up to close the gap at 34.49. The industrials were up 0.59% today, and I do think the industrials Santa rally could take us up to fill the gap at 100. The healthcare sector was up 0.06% today, with the Santa rally likely taking us to fill the gap around 137. The energy sector was up 3.19% today and getting very close to a bull breakout if we can start closing decisively above 87, and we will be looking for that upside resistance around 88.6. So jumping back over to the SP 500, based on today's bounce and holding the critical support and going into the seasonality of the Santa rally, plus we have the weekly chart that shows us the selling pressure is drying up, I think there's a very good chance we see the Santa rally next week. That could take us all the way up to 387, all the way up to 396, so watch those critical resistance levels and stay optimistic of a rally as long as we're above the critical support at 378. If we're wrong, and the price action will tell us, because we'll slice right down through support and we'll be looking for the next leg lower in this bear market. Also, don't forget I have Bank Trade Alerts, which is an algorithm-driven trade alert service that only trades the ETFs TQQQ and SQQQ, and sends you all of your buy and sell alerts directly via email and text message. You can learn more about Bank or learn how to subscribe by clicking on the link in the description of this video. If you're looking to become a better price action trader, come join us at the Stocks Channel Trading Discord community where you get access to all of my intraday updates and analysis. You can find out how to join the Stocks Channel Discord by clicking on the link below. So thank you for watching, everybody. I hope you're crushing this market. And as always, I will see you in the next episode.